Previously, we talked about the support and resistance. Right in this video, I'm going to show you practically what candlesticks are all about, how to read and understand what each candlestick is telling you from different positions on your chart. Let's go. Now, for every candlestick you see out there, whether it is bullish or bearish, a bullish candlestick is represented in green color and a bearish candlestick is represented in red color. All right, now every candlestick has a body. Okay, it has a body and it has a wick. Look at it this way, imagine it this way: your simple candle you light out every day. Okay, probably maybe you're in darkness and you just want to lit up your candle. Okay, it has a body and of course it has a wick. The wick is what representing the rejection of price, while the body is representing the price itself. I'm going to break it down systematically so that you understand what I am saying. All right, this long part here at the top is called the upper wick, while the bottom, the long part at the bottom, is called the lower wick. All right, basically this is what a candlestick is all about. Very simple. Next, I'll be showing you the bullish candlesticks and the bearish candlesticks, how they are what formed, so you understand clearly what I'm saying. Having clearly understood the dynamics and psychology behind a candlestick, it is very important you understand what a bullish candlestick is all about. Now, the bullish candlesticks, first of all, understand that it opens from the bottom. The price usually opens from the bottom and close at the top. So now, looking at this picture, you can see we have the high, we have the close, we have the open, and of course we have the low. The price opened from the bottom and closed at the top, right? Good. Now, what this candlestick is simply depicting is that when the price actually opened, it went as high, okay, as this particular point here, the upper wick, and then it closed at this particular point. It could also be that when it opened, it went as low as this particular point here where we have the lower wick, which is the low, rose up again to the highest point, and then closed at this particular point where we have the close. All right, in other words, it went down, telling you that sellers pushed the price downwards, but buyers rejected that price. Remember, I told you the wick is showing you rejection. All right, buyers rejected that price and they pushed it upwards again to the highest point and then closed at this particular point here where we have the close. In other words, this is a full formed bullish candle. It's a normal bullish candle. We have different kinds of bullish candles. There are so many. In the course of this session, we'll get to understand them and figure them out one after the other. So next, I'll be showing you the bearish candlestick. It's simply the opposite of the bullish candlestick. The bullish candlestick opens right at the bottom and closes at the top, meaning buyers push the price upwards. But the bearish candlestick opens from the top and closes at the bottom. You're going to see clearly now what I'm saying. All right, good. So basically, you can see this is actually a bearish candlestick because it's red in color, signifying that it's actually coming down and bears are in what control of the market. In other words, the sellers are in full control of the market. All right, now the price opened from the top. Okay, it opened from the top and you can see it went up to this highest point and then came down to this lowest point, which is the lower wick here, and then eventually closed at this particular point. All right, good. Now what this is telling you is that at this point here where you have the high, okay, the sellers were in full control. That's the rejection, telling you that the seller said, hey, there's no position here for you, telling the buyers there's no position for you here. So they pushed the price down to the lowest point and buyers came up here. and said, look, we have to push the price up again. They did, but they couldn't. And then it eventually closed here. So basically, this is just a simple fundamentals that you need to put at the back of your mind. Okay, know the rejection zones, know what a candlestick is, and trading will be fun. Okay, this is more like an elementary session. In the next video, I'm going to be talking more about candlesticks combinations. Okay, combination of candlesticks, candlestick patterns, the way most people call it professionally. So we'll be talking about that in the next video, and then we'll also be talking about trend patterns. A group of candlesticks is called a candlestick pattern, and then a group of candlestick patterns is called a trend pattern. All right, so I want you to get the memo. So cheers guys, I'm going to see you in the next video as we proceed.